Hewison here, president and founder of iknow.com and co-founder of MarketClub with your midday update for Tuesday, the 20th of November. Can a 12-year bull market continue in 2013? That's the question. You know, for the past 12 years, gold has been in an uptrend by closing higher every single year. Yes, we've seen pullbacks, but had you bought gold at the beginning of the year and held it until December 31st, you would have made money. The question is, can this powerful trend continue through 2013? Predicting 1 year into the future is a tricky business for anyone, and it is not one we engage in at MarketClub. We prefer to rely on our tried, trusted, and market-proven trade triangle technology. It has produced consistent profits in gold. The key level in gold is 1738. We've talked about this all last week, and this week we've gotten up to the 1734, 1735 level, but we have not breached that 1738 level. So wait, that's the trigger point. Oil flashed a buy signal yesterday. Even though it's down dramatically today, it still flashed a buy signal. So if you're not in the oil, it may be something you want to look at. We'll be covering that market today. Also, yesterday's rally in the equity markets was a counter-trend rally in a bear market. We are still seeing some pressure in those markets, and we expect that market to come under pressure. So let's look at the big implosion today, and that was HP. HP basically writes off $8.8 billion and on their purchase of Autonomy, which was a disaster from the get-go under the previous. This has had nothing to do with Meg Whitman, who's the current CEO of that company. It had to do with the other guy who was a disaster for HP. So the bottom line is the market's down dramatically, over 10% today, down to 1188. The good news is for Market Club members is we kicked butt in HP this year. We actually got out of the market, went short at $25 a share, and has stayed in that position, that remaining downward trend ever since. We'll be looking at HP today as well. So let's go to our portfolio manager, and let's start with the S&P 500. So here we are in the S&P 500. You can see, excuse me, you can see yesterday we had a big day up right here that kicked in a short-term buy at 1380. Now, that's not really a buy, maybe a cover shorts, but that was an indicator that the market made that turn. No follow-through today. Not to say we won't see some more follow-through, but the reality is if we draw our Fibonacci lines from this level here, you can see that we are very close to hitting a 50% retracement. In fact, we probably did on the today, and we're very close to a 61.8% retracement. That should be enough for this market to stop on the upside. That's our current approach anyway. You've gone below the 200-day moving average, and if we just simply put a 200-day moving average in here, it's just easy to do. And there it is. You've closed, looks like 4 days below a 200-day moving average. Bounce back up. Maybe that's enough. We'll see what happens. But we have our tried, trusted, and market-proven trade triangles that tell us when the market's making a change. So let's go to the next market. That's going to be the Dow. Dow, pretty much the same pattern there. We actually had a little buy signal, a little short-term buy there. But nonetheless, the trend continues down. There's the 200-day moving average. You've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days below the 200-day moving average. Very convincing. And I think we'll just sort of see a little bit of a reprieve from this very oversold condition and then return back to the downside. Looking at the NASDAQ, this is the combined NASDAQ. Obviously, yesterday was a big day because of Apple having a big rally, but no follow-through to speak of today. Way below the 10-day moving average. You've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days below the 200-day moving average. I don't think we're going to recover anytime soon. And probably getting to, let's just put our Fibonacci indicator on here again. Yeah, you can see we're very close to that 50% retracement from these highs here. And I expect that's where it's going to be an end around maybe the 2950 level. But we don't see a lot of hope for this market to rally and a new bull market starting. It's too early in our opinion. So let's go to our next market. That's going to be the euro-dollar. Now, the euro-dollar around the 128 levels definitely has resistance. You can see these previous lows here. That was 128.25, 128.30. So right around that level is where we expect the market to have resistance. So it has corrected from a very oversold condition, but we're not bullish on this market per se until our weekly really turns green. That would get us bullish. So the longer term trend remains positive according to our trade triangles, which is something you have to look at. And you can see we've just turned up on the MACD. So let's watch that market very, very carefully. Now, crude oil is a big story today. You see a big down day today after you get that weekly buy yesterday. You're back into support. This is where the market has found support right around these levels. I think if you're not long crude, this may be an excellent time. Sometimes you have to stand in front of these markets, but you have a daily and a weekly still positive. This has been a very successful combination using the daily, the weekly for time trading. Let me write this down so we get it right for you. So we're going to use, so it's the weekly right here. That's for the trend. And the daily is right here for timing. Okay, so that's what you do in this market. Now, I want to show you something because we've had some incredible results using this strategy. So it's not unlike, here's the update right here. Bump, big pullback, but less of a pullback. And we're just building this base. But look at this level here. This is the definitely sort of line in the sand right here, right around 90. If we go over 90, then I think we've got this market made. I think that's what's going to happen. So let's clear the screen off. Go to our next market, and that's going to be, if I'm not mistaken, be gold. So here's gold, pretty much the same pattern there we've been talking about. It's under pressure today. Had a nice day yesterday, but again, the key level there, which we've talked about, is the level right here, and that's 1738. We need to see the market go over that level before we get super bullish. That will turn this one remaining red triangle green and indicates that the prices will be going higher, and that will push the market certainly up to the 1780 to 1800 level. So let's see how that plays out. Nonetheless, you've got to pay attention to it. We did get a little bit overbought here, and maybe no, I'd say just a little bit overbought, but I think we're going to see this market do better. So let's clear the screen, go to our next market, and that's going to be copper. Copper's put in a pretty good performance. 355 is a big area. There's the 200-day moving average. There's a parabolic there. So you've got some green arrows there, green triangles, I should say, but you still have the red weekly triangle. So let's see how that plays out. But generally speaking, we may see some more of an upside on this. So let's go to silver. Silver, again, this is really acting super well, actually better than gold. It's a plus 90. The trend is up. You can see we've actually completed this kind of a nice base here, and it looks like it wants to go up and challenge the 35 level, which is right here. So that's from the highs there. So again, it looks as though we're higher for the week, and that's the important thing. We're also higher for the last several weeks, and that's why we've got this plus 90 reading. So very positive for silver. So let's clear that all off, go to our next market, and I'm going to go back to our portfolio just for a second. The next market is HP, of course. I just want to show you an HP and how beautiful this market trended down. So let's just get a little more 6 months action. Let's say 1 year. This is year to date. And I'm going to just put on our monthly. You can see our monthly kicked in right here, and that kicked in at 2502 on March 5th, and you can see it's never ever turned around. This may be the bottom today with just all the bad news exposing the autonomy for what it was. Let's just see how this works out. But generally speaking, we've done very, very well in this market in two ways. One, keeping out of trouble, meaning if you didn't have to hold on to this decline from 25 to where we are right now. and also trading the market from the short side. So it's worked out very, very well for us. Speaking of which, I want to show you some results we have in MarketClub. And I'm going to go back to our home page. And this is access to, every member has access to this. So here it is. So we want to go to our World Cup portfolio. We just posted the results through Q3 of 2012. And here they are. So in 2008, 501%, huge returns. I mean, that's just unheard of. More realistic the next year, 48, 35 in 2010, big year in 2011, 186. And so far in 2012, it's 73.8. It's interesting, the last quarter of the year, meaning Oct, Nov, and Dec, October, November, December, has always produced profits, and those profits are not reflected in those numbers today. So again, a really positive year. And what's nice about that, as a Market Club member, you have full access to all the signals. We just show you them right here. Corn, wheat, soybeans, crude oil, spot gold, and the dollar index. They're the markets we trade. 1, 2, 3, 4, 5, 6 markets. You diversified. The biggest risks on a quarterly basis was a loss of 16%, which I think you'll agree with is pretty small given, and that was this year, but you've made all of that back and then some, and now you're up 73%. So again, these are the returns which we're very proud of. We've been posting these up for Market Club members. So so far, this is our third best year. And I think that's something we're very happy about. So the idea is basically to make consistent returns by diversifying into non-traditional investments such as corn, wheat, soybeans, gold, crude oil, and the dollar. They all make sense. Hey, I'm Adam Hewison from Market Club. If you're a member of Market Club, you have access to this. Just click on the front page. If you're not a member of Market Club, you may want to join just so you get these signals. And again, you just simply have to go back to here. And it takes you right, this is the key level where you want to click, and that is just click right here. And that takes you to the results all the time and the new signal. So you can just call your broker if you talk to them, or place it online and forget it. Just go with the flow. You'll find it works out very, very well. And be disciplined. That's the key. Hey, I'm Adam Hewison from Market Club. Thanks for stopping by. Every success. We'll be broadcasting tomorrow, and then we won't be broadcasting again until Monday because of the Thanksgiving holiday. I hope you all have a great, great day trading, and we'll see you tomorrow at the same time, same place.